everybody. Welcome to the Technical Analysis webinar here with AvaTrade. My name is Troy. I'll be presenting. As we get started, let's keep in mind some things with regards to risk. There's risk involved with each trade that you take. I think we all understand that. And you want to manage risk in a way that makes sense for you. And we'll go over some ideas in that regard if we find some trades to simulate. There are actually some nice tools within our order window in our web trader and our app that make the risk management side of things quite a bit easier. So we'll go over the nuances of that within the order window if we get a chance. Also keep in mind that what we go over is not meant to be financial advisement, but is coming from an educational perspective. Now from our main website, we can log into the web trader platform, which has the same tools and functionalities that you'll also find in the AvaTrade mobile app. And you can trade on both MT4 and MT5 accounts from the one location. So if we log in here in the upper right-hand corner, we'll find ourselves in the web trader platform. Now, the focus today is technical analysis, but we probably should talk a little bit about the fundamental side of things, just to understand maybe which direction the wind is blowing, so to speak, maybe with different instruments, so that as you go in to do your technical analysis, there might be a preferred direction that you're hoping to find an opportunistic entry point or a confirming trend, etc. The big headlines really that I've seen today that have been in the news, one is the US is very close to passing what they keep calling the big beautiful bill. It's a tax bill that has all kinds of implications in terms of reducing taxes on businesses and individuals, maintaining tax cuts that were put in place under the first Trump administration, and a number of other things. I think it's 1,000 pages long or something like that in terms of all of the legislation that's involved in this bill that will, I think, be voted on today or tomorrow by the House of Representatives in the US. It already passed the Senate with some adjustments from what the House had already passed. It went back to the House to see if the House will approve the adjustments. Now, it could be adjusted again and sent back to the Senate. This is kind of the way it works with legislation in the US. But it looks like it's very close to maybe reaching the floor for a final vote in the US House, which would mean if it passed it as it is, it already passed the Senate, so then it would be sent to President Trump's desk for final signing. I think this could create quite a bit of movement on the charts. You have to decide whether you think that's positive or negative for the markets, but in general, tax cuts tend to be a positive thing when we talk about the equities, the major indices, that sort of thing. Maybe there'll be some fears about inflation. There's a lot of spending in this bill if they approve it that's occurring. They tried to do a lot of cuts in different areas, but still there's a lot of spending. And that's some of the worry with some that were against it. So that on the fundamental side of things, that's a big deal. I think there's more optimism about it passing. If it passes, that there's optimistic headwinds from that rather than negative, but we'll see. But that's something to keep in mind. And the markets have been kind of wiggling down and back up, without much of a big run in any one direction so far, but leaning towards the positive side as it's inching closer to a possible vote on that package. Okay, now another bit of news that came out today, the advanced data payroll, which is jobs data that comes out in the US once a month, and it precedes the non-farm payroll numbers that come out typically the first Friday of every month, which would be this week. That data came in quite a bit more negative than expected. There was an expectation of near 100,000 jobs created, and it showed negative, I think 29,000, something like that, which then puts maybe fear of recession, of negative economic things going on when you see such poor jobs data come out with the advanced data. We'll see what the actual numbers are with the non-farm payroll on Friday. That could create some jitters, though, having such bad jobs numbers. But at the same time, that might increase the expectation of a rate cut coming at some point in the US, and rate cuts tend to be positive for the markets. So depends how you read that bit of data. I think it's mixed, maybe, the reaction to that kind of data, showing weakness in the economy with weak jobs numbers, but at the same time, maybe increasing expectation of a rate cut then, if the jobs numbers are so bad. Maybe justification for Jerome Powell eventually here to approve a rate cut in the US on the federal interest rate. So we'll see how that goes. But those were two big stories that were kind of in the air today, feeding maybe a little more positive energy than negative, but certainly creating some movement on the charts. With that said, and understanding that there could be a vote on the US House floor today on the tax bill, or certainly by tomorrow if they're going to get it to President Trump's desk for signing before the 4th of July holiday, which is what he's requested they do. So today, tomorrow, be on the lookout for that potential vote and potential passing of that tax package. Okay, so with that in mind, maybe we look at some technical signals. And by the way, if anyone has questions as we go along, or you want to give some input, feel free to do so, and I'll address your questions or input as I see it pop up. Now, if we look at something like the US 500, we can see if there's a signal on it. And if there's a signal coming from Trading Central, we'll see the symbol here next to the instrument name. Okay, so I see there is a live signal in the US 500 and really on all of the major US indices. I'll look at the US 500, and not surprisingly, it's a buy signal. I think we're leaning towards, as we reviewed the major headlines today, leaning towards a bit more positive energy today than negative, as the US gets closer to maybe passing that tax package through the US Senate and House. So we see buy signal here. It's already climbed nearly to the take profit zone. So if you were looking at this signal a couple hours back, maybe you're already in the money quite a bit. We see that the pivot line held. This is the support level below that was drawn, and it's a key enough price level that they've named it the pivot level, meaning that if this did drop and break below this price, then they're saying they think it would drop further because that would signal significant downward momentum from a technical breakthrough of that support level. It did not break below the pivot level since the signal came in. It continued to climb since the outset of the signal, and it's looking to try and get to this first resistance level, which is the beginning of the take profit zone. Typically, these signals give you a short-term type trade, where once you start to reach the first resistance levels on the chart, they start to suggest that maybe you take profit. So because there's a resistance level here that pushed back down in the past, they're suggesting that if this does get up to that first resistance level, you could think about taking profit there. Or if we look at the larger candles, we'll see there's another resistance level further back in time at this higher take profit level. So somewhere in this zone is the suggested take profit, which it did not reach yet, but it's gotten close to that. So if you were going to follow this signal, maybe you're getting in a little bit late, but it is still an active buy signal because it did not reach the take profit zone and it has not broken this support level that's named as the pivot level. Okay, so we can analyze this chart further to see, is it something you'd still be interested in? Even though maybe you're a little late getting in on the signal, you'd rather get in down here as it's first bouncing off the pivot. But let's see what's happening. I do see right away something sticks out to me on the 1 hour candles, and that is that it tested this price level earlier today and pulled back. Okay, we see this wick here, it got near this price and pulled down. Then just about 5-6 hours ago, or 7 or 8 hours ago, it hit this price area again and pulled right back down. And now here it comes up for a third try. in the past, say, 24, 48 hours to try and break this price level again. So it appears that the momentum did not completely die. It's surging and it's going to challenge this price level potentially to try and break it. And if it does, then maybe indeed it does head to the top of this take profit zone, which is 62.82. I can draw that line. 62.82 is right about here. Okay, so this is our take profit zone really between these two lines. And the way I would be looking at this is if there's enough momentum to break this resistance level, then I feel like it might continue to move up. Okay, so if you feel like you're a bit late buying on the original signal because it's already way up off that pivot level and almost to the take profit zone, then maybe you're waiting to see if there's enough momentum to break this resistance level, which is here. And if it does break that resistance level, then you could have a pending order to get in at that point, because this would be a confirmatory breakthrough of the uptrend continuing if it breaks this resistance level. So this would be what we'd call breakout strategy, that if it breaks that resistance level, then maybe you're interested in buying. And if it can't break that resistance, then you don't ever hit your pending order above that line. Okay, so if that's the case, then maybe I'm looking to see, would I really take profit so soon here? If I'm waiting for a breakthrough of this resistance, I don't think I would probably take profit so soon as here. So I need bigger candles to see where's that next major resistance level. So I start to look then at 4-hour candles, for example, and I look off to the side and I say, no resistance still. And if you think about where the US markets have been, this might be an all-time high type location, meaning there is no more resistance above this price. So this arbitrary resistance level that's drawn here might be just that, just an arbitrary number that was picked for a certain percent gain. Whereas maybe there's not actually a resistance level on the chart because we're at all-time highs potentially. But let's check and see. If we go to 1-week candles, we'll find out real quick that, okay, we are not at all-time highs, or are we? Let's pull the candles over, and in fact, we are. So here are the 1-week candles. These were the old all-time highs right here. And we had this big pull down and then back up. And now we've broken this resistance and up to new all-time highs. Okay, so these lines down here were old resistance levels from further back in time. I can delete some of these just to clear up the chart. And what we see now is we're off and running past the all-time highs at new all-time highs yesterday, today, and maybe even moving into tomorrow. So then that becomes more meaningful from a technical sense, because now we look here and we say, you know what? If the momentum breaks this resistance level here, there is no more resistance. This is just an arbitrary number. So if I'm picking an arbitrary number as a resistance level, maybe I pick a round number like 6,300 or 6,350. Okay, a lot of times traders will sell and the market will pause when it hits round numbers if there's no other resistance on the chart. 6,300 being the first real round number once it breaks this resistance here, if it does break it at 62.70. Okay, so let's propose this trade then. Okay, we go in the direction that we maybe feel the fundamental news is headed, with optimism about a major tax package and budget package passing in the US, which would include a lot of tax cuts and incentives for businesses and corporations and individuals. And that being the case, then maybe you view that as momentum, that maybe if this resistance breaks, we might get a surge up. Maybe it means there was good news on that bill potentially passing. So we take a look at that and we say, pending order then, if it does go above 62.70, execute when price hits, or maybe it should say execute if price hits 62, let's say 75. Okay, if it breaks this resistance by 5 points, 62.75. Okay, so that would be right about here. Okay, 62.75. And if I zoom in maybe on 5-minute candles, it'll be maybe a little better view. So here's the resistance level at the all-time high. This is the all-time high in the S&P 500. If it breaks the all-time high, that confirms upward momentum. Okay, confirms the signal also was good from Trading Central, and confirms maybe your suspicion that there's optimism on the market about this budget and tax package potentially passing in the US. And that maybe those poor jobs numbers today just increases the likelihood that people think there'll be rate cuts. Okay, so if you're in that camp, then you're waiting for a technical breakthrough to confirm the uptrend. And if it breaks it by enough to hit your entry point, then it triggers the buy. Okay, the take profit, like I said, it's an arbitrary number because there's no technical resistance up there. We're in all-time high territory at that point. So if I say 6,300 for the take profit, stop loss, if it breaks this resistance and it's a true breakthrough with a lot of momentum, once it triggers the buy here, hopefully it wouldn't then come back down and hit our stop loss back below this resistance. So you put your resistance somewhere below, put your stop loss somewhere below this resistance point, because if it's a true breakthrough with momentum, it shouldn't come back down necessarily and break back below this level. That should act as support at that point from a technical perspective, because whatever news causes it to break above should then help hold it from very easily breaking back below. Okay, sometimes it'll break through, come back down, then go, and that could hit your stop loss and get you out, even if you were right on the direction. So sometimes you want to be careful about putting your stop loss too close, but it has to be at a distance that's the proper risk management amount for you as well. So I'm going to take a look here and I'm going to say, I would want my stop loss below this support level and then maybe below this one here too. There's another one that was resistance and then broke above. So it would have to break below this price level and this price level to hit my stop loss if I put it down here. So that makes me start to feel more secure about my stop loss, that I won't get hit on a false pullback, that then it carries back up and I'm mad that I had my stop loss too close. So I put my stop loss down here maybe at 62, 63, 62, 64, right in that range. Okay, so if I come here and say 62, 64, 62, 65, something like that, then my potential profit at 6,300 is 37.50, and my stop loss being down below a couple support levels, I'm risking less than half of that. So I could even go down a little lower and still have a nice ratio for risk and reward. So 62, 63. Okay, I can sheet this down just a little bit. 62, 63. Okay, so there's my stop loss, and I'm risking about half, less than half of what the potential profit is here to the first round number, remember, at 6,300 up here. If that's going to be my take profit, 6,300, right there, okay? So now we go back to larger candles, maybe 30-minute, and I can see my setup. Couple resistance levels here. If this breaks through 1, 2 resistance levels and reaches the all-time high, it triggers a buy with that upward momentum, with the potential profit better than double the risk if it comes all the way back below those prices and hits my stop loss. Okay, so if I'm right on a move like this 1 out of 3 times, I still have a small profit. Okay, and if I could be right better than that, better than 33% of the time, hopefully I can be right better than that percentage, at least half the time be right. No guarantee of that, but if you can be 40, 50% accurate with this type of setup, you're making a really nice profit because the payout here is better than 2 to 1, okay, with this setup. And it's only going to enter if the technical breakthrough confirms that uptrend. Okay, so if we're all set on that, all we have to do then, now that we have the entry point, exit points picked based on the technical analysis, now I just need to adjust my trade size to be the amount of risk and potential profit that I'm comfortable with. Okay, so Now I go up and I say, okay, if I'm going to change this to 0.4 on my lot size, now I'm risking 480, which is less than 1% of my balance. Okay, so going into your trade, you should know how much do you want to risk, and then set up the trade size once you've done your technical analysis to have it set up the way you need it based on the price levels and the technical setup on the chart. Now you can adjust the trade size. So I can go a little larger than that, 0.5, and I'm now a little more than 1%. Now I'm making up 1% as a level that maybe I'm comfortable risking on a trade. So if I do 0.45, now I'm almost exactly 1%, a little less than 1%, but almost 1% possible loss compared to my balance on the account. Okay, you can risk more than that percentage-wise, less than that, but you should go into the trade understanding how much do I want to risk, and it's calculating it for you here, and how much profit do I want to go after. Okay, and this is the risk to your stop loss. You can lose a little more on overnight interest costs, that sort of thing, if you hold the trades overnight, especially if it starts to be multiple nights, weeks. But a trade like this, it's going to reach one of these price points, either the take profit or the stop loss, probably in a pretty short period of time. I don't think it would take very many days, and it could even happen in hours. So this type of setup is more of a short-term move. And so I'm not so worried about the swap costs carrying on to be a pretty minuscule cost. And what we're looking at here then is pretty close to what your possible loss would be compared to risk, assuming no large gaps over a weekend or something like that, or major slippage with major announcements, that sort of thing. So once you're set up here with your risk management, then you're ready to enact the order. In this case, I call it an order and not a trade because it's a pending order. It will only open if it hits the trigger price here. So the pending orders are listed here under orders. You see the trigger price. If it hits that price, I'm in. Okay, and then I have that risk management setup that I set there with less than 1% risk to the stop loss, greater than 2% potential profit to the take profit. Okay, and if it hits the trigger price, then you'll see it listed in the positions area here, which is where market trades are listed that are already opened. Okay, any questions, comments on what we went over before I move on to another instrument? I don't see any questions yet, but if I see them pop up, I'll address them as we get to them. Now, how about something like gold? It's interesting to see maybe what it's doing today. It wouldn't surprise me to see a buy signal on gold right now. We'll see what it is. We'll take a look at the signal. Yeah, it's a buy signal. And why would I say that? And you might be thinking the opposite, because we talked about that there seems to be more optimism on the market than pessimism. There's buy signals on the equities, on the major indices. It seems like there's optimistic buying on the markets. Why should gold go up when fear is down, right? And my answer to that would be, yes, gold is a safe haven that people buy when there's economic fear. But also gold is a safe haven when there's not necessarily economic fear, but fear of inflation, fear of a weakening currency. And so if there's optimism that there's this big package going to be passed in the US that has lots of tax cuts, but lots of spending involved in that package that they might pass, the fear might not be that the stock market will go down. The fear might be that stuff will rise so quickly that inflation could come back from all the spending that might be approved in that package. And so it doesn't surprise me to see gold pushing up some as that package potentially gets voted on in the House of Representatives in the US and potentially moves to passing. So gold, I think, has a couple reasons to climb. Fear of a lot of spending and potential inflation and potential weakening of the US dollar with the idea that rate cuts might be coming pretty soon in the US. Okay, interest rate cuts tend to weaken the value of a currency. Okay, it's not a one one-to-one relationship, but there is a relationship there that, as interest rates go higher, money is expensive. It costs more to get that money to take out a loan. And so it's harder to get that money because it's more expensive to borrow. So that tends to strengthen the value of the currency if interest rates are higher. And the opposite if interest rates get cut. If they go lower, then the money is cheaper to get. Okay, and with more cash on hand, then that waters down the value of the currency in theory by having lower interest rates and easier access to cash, to larger amounts of loans. So with that idea, it doesn't surprise me to see that gold might be climbing with today's news, okay, with the fundamental news. Now, the question from the technical side is, are you interested in this technical movement? Does it look good technical analysis-wise? Does the movement confirm those ideas from a technical standpoint? And so I do see a support level that held. Here's the pivot level in the signal at 33.27. It attempted to break once, failed, twice, failed, just within this small screenshot. And here it is trying to climb towards the take profit zone up here. It looks like maybe if you were going to buy on this signal, you're getting in at a little better price point than the US 500 signal because it hasn't gotten as close to that take profit zone yet as the US 500 move did, which is why in the US 500 we did a pending order to see if there's a confirmatory breakthrough for further movement rather than buying on the original signal. And with this one, it maybe looks like you could buy on the original signal, get your stop loss down below this support level and your take profit up in this take profit zone, and you'd have a little better potential profit than the amount you'd have to risk to get your stop loss below the support level. The idea of putting your stop loss below the support level would be if it breaks the support, the signal is telling you then that's a sell scenario. They would expect it to drop further from a technical perspective. So why would you stay in a buy trade any further if it broke this support level and then the technical signal says they expect it to fall further if that happens? So it makes sense that if it does break this support level and then this sell scenario becomes active in the signal, that's when you might get out of the buy trade. Okay? Now, with that said, sometimes you'll have a false breakthrough, it'll hit your stop loss and then go back up. And you'll say, why didn't I put my stop loss further away? You can do that if you want. You also could have your stop loss further down if you were buying and you wanted to try and avoid an easy hit on your stop loss. Or you could trade with something different, like AvaProtect, rather than using a stop loss. If you think that in general it'll go up the next day or two, especially as we get closer to the non-farm payroll announcement on Friday, but you're afraid that in the short term it can come down and hit your stop loss. So if that's the case, then rather than a stop loss, you can set up a trade with what we call AvaProtect. So let's say you wanted to buy on this, but you're afraid in the short term that you could get some spiking on gold before it makes the move that ultimately you think it might do, which is to climb. Okay, so I'm not saying you should buy on this, but the signal says buy. And maybe the idea about this big package passing in the US with lots of spending, maybe that tells you you should buy on gold. And if that's the case, I'm not saying it should be in your mind, but if that's the case, then you're looking for a way to buy on this maybe in the safest way possible, knowing there's a lot of volatility coming as they start voting on that tax package. Okay, so I'm going to use the scenario here where we use AvaProtect instead of a stop loss in the beginning of the trade. So let's say I want to buy. I like the technical setup, maybe. I like the support level, but I'm a bit concerned about the fundamental effects in the short term. So I trust the support level, but not enough to get through all of the, maybe volatility that could come with this U.S. House of Representatives voting on the tax package. A lot of times you'll see false breakthroughs and moves before the real move occurs. So to avoid getting knocked out of a trade on a short-term pullback, if you were buying on this, you could use AvaProtect if you think it could pull back, but then go the right way. All right, so let me set this up with AvaProtect, and we can protect by the day, by the hour, depending on what's being offered. Right now, I see it's offering 1 day protection, 2 days, And those are the two options, 1 day and 2 days protection. So 1 day is about 4,000, 2 days is 5,000. So it doesn't cost much more to do 2 days protection as compared to one. 4,097, 5,000. So, okay, I'm going to do 2 days protection then. And then at the same time, I need to adjust my trade size because I don't want to risk 5,000 on one trade. Maybe I want to risk about 500. Okay, so instead of 2.5 lots, maybe I need to do a quarter of a lot. Okay, so now the protection is just over 500, which is less than 1% of my balance. So I'm trying to stick to my risk management plan. Whatever that amount is for you, each trade you set up, you should try and make sure you stay within the risk management that you're comfortable with. So I'm looking at risking 512. I say risk, I'm going to pay that up front for the protection, and then that's my risk for the protected time period. Okay, AvaProtect protects you until the expiry day and time of the protection. So this would take me all the way to July 4th at 5 p.m. Okay, 1700. Okay, that's my local time. It'll show for your local time. And so I want to take a look at something real quick before we finalize this move. And that is, I just thought of something. Friday is the 4th of July, which is a holiday in the US. So either the non-farm payroll numbers will come out tomorrow or they will be the next week. So let's take a look and see if they're tomorrow. If we go to July 3rd, and we take a look, yes, non-farm payrolls are tomorrow. Okay, because Friday is a holiday, usually the non-farm payrolls are on the first Friday of each month. This week, they're on Thursday, which is tomorrow, because of the 4th of July holiday. So on July 3rd, we have the non-farm payroll numbers, which is tomorrow, along with average hourly earnings, initial jobless claims, and a number of other data points that are coming out of the US. So very big deal here. We'll see the advanced data was expecting about 100,000 and it came in at -30. Let's see if the actual data on non-farm payroll mimics that and comes in below the expectation or not. We'll see tomorrow. So then this makes this trade setup with gold that much more interesting because the announcement is actually tomorrow and not Friday. I'm glad I triggered that in my brain about the 4th of July holiday. So we're looking then at setting this up with AvaProtect and saying 2 days protection gets me through the non-farm payroll announcement into Friday. Okay, I also could do 1 day protection, which is cheaper, and that also gets me through the non-farm payroll announcement because it's before this expiry time, and it gives me an hour and a half after the expiry. After the announcement, before this expires, I only have to pay for 1 day. And now I can take a little larger trade than what I was looking at. Instead of a quarter of a lot, maybe I can do 0.3, and I don't need 2 days protection. I don't want to carry it into a holiday that then runs into the weekend necessarily. So if I do 1 day protection, this goes to the 3rd, 5 p.m., costs me 491, that's less than 1% of my balance. I can even go larger than 0.35, 0.33, and there's about almost exact 1% of my balance, 0.33 lot size. Now I can take a look and say, okay, where do I want my take profit? Where could it go to by 5 p.m. tomorrow on gold? So I start to look at 4-hour candles, something larger, and I say, okay, if this has a lot of momentum, it likely could break the first resistance level or so and work its way up, say, to one of these resistance levels up higher. And so I'll delete the higher ones. And this is the first major resistance I see in the past on the 4-hour candles where it hit and dropped, hit and dropped, hit, and really plunged down. So if this starts to surge up, perhaps it can make it to 33.93 or so before running out of energy. Not that it couldn't go further, but that's a spot on the chart, technically speaking, that looks like it's not too ridiculous to think that it could make it there. So 33.93 gives me a potential profit of over 1,500. The cost of the protection is 540. Okay, and the benefit of paying the protection up front is even if it spikes the wrong way, and maybe I have my stop loss on a regular trade here, even if it comes down below that and then goes back up, I'm still in the trade. I don't have to put a stop loss during the protected time period, okay? Because I have no risk. If this goes down, drops $200 an ounce, I get all of that paid back. Any loss on the trade during the protected time period, I get added back when the trade closes. So I can be more patient with the movement, even if it's going the wrong way, by having the protection. That's the benefit of the protection. The question is, do you want to protect for 2 days or 1? Okay. Given that the non-farm payroll announcement is tomorrow, Friday is a holiday, I don't think 2 days makes sense in my mind, but it might make sense for you. You could do a longer protection time period if you want it. So with this setup, I have the risk that I'm comfortable with. I have a take profit area that makes sense to me with a potential profit of over 3% on the account. I have to pay about 1% up front, okay, and go after 3% profit, which would leave me, if it hits my take profit, with an overall gain of 2%, okay? If you're right on a trade like this 40% of the time, you're going to be profitable, okay? And so if I like the setup, stop loss I don't need to enter yet. As it gets closer to the expiry of my protection, this expiry time, then I might think about adding a stop loss somewhere to have a backup protection if the trade is still running, if it hasn't closed before then. Okay, all right, so there's a setup for a market move. So now I'm in. The 1% came out of my balance. I just paid 540 or so for that protection. Now I can be patient all the way until 5 p.m. tomorrow after the non-farm payroll data comes in, maybe after the signing of the tax bill, lot that could happen between now and then. And I don't have to worry about any spiking in the wrong direction. I'm protected all the way until that expiry on that AvaProtect protection that's on that trade. So the market move is open and running. Okay, trying to go into a profit already. We'll see what kind of momentum it carries with. And this one will only open if indeed the resistance level breaks and it goes to an all-time high on the US 500. It's waiting for the technical breakthrough. Okay, I think this is a good place maybe to stop for the session. I didn't see any questions pop up, so I'm assuming I was clear on everything. I also didn't see anyone drop out. The number of attendees stayed pretty solid all the way through, so it must have been interesting as well. So thank you for staying through the whole session. We'll see how these trades turn out. I have a pretty good feeling about them. Let's see. The fundamentals are maybe backing up the technical setup that we saw on each of them. Everything's risk managed, though, in case the fundamentals change, right? The news could change on one headline. So you always protect yourself, even if you feel pretty certain about a trade. If you feel good about the trade, you still want to manage the risk just in case the news changes and can affect the technical movement. All right, everybody, thank you for joining. We'll see how these carry out. And I have another webinar tomorrow for anyone who can attend. It's focused more largely on the fundamental side. And we'll go over some things in specifics as we're headed towards the non-farm payroll announcement and the other numbers that are coming out. The session tomorrow will be at 11 a.m. UK time. All right, everybody, thank you for joining and good luck with your trading. Bye for now.